Great to have you with us. You're out with this preview note today. Which tech stock in your coverage universe do you think has the most at stake in terms of earnings?
You know, we continue to highlight Amazon, Google, Facebook as a basket. We like those three names. If you look at, the bricks are beating the clicks. Target, Walmart, Costco have stolen some thunder, and tech has been under pressure from valuations as well as the regulatory overhang. So we think a lot of these stocks, the sentiment going in for large cap internet is somewhat mediocre. It's definitely hotter for what we would say in software and other areas of tech. So we think the setup is actually reasonable. Many of these companies are going to grow close to 20%. The consumer's healthy, and we continue to believe the secular tailwinds online continue. So we don't think that there are any material big issues. Facebook, potentially could give more sour guidance on next year's number, but I think ultimately they've been very conservative. And that stock's up 40% year to date on guidance that they gave that they had raised after the first quarter out. So we think, again, the setup looks pretty good for internet. It's a higher bar for software. Microsoft and some of the other names have definitely a higher bar to clear as we cover both sectors. But, we think the sentiment for internet's fairly mediocre going in.
Yeah, the high valuations in the stock runs make it a little bit more difficult for software. But in terms of Alphabet, the last quarter, when you take a look back, they came out with this stellar report. A lot of analysts on the street were saying this is the moment where Alphabet should be re-rated. Maybe it deserves a re-rating. And here we are. We're just about at levels that the stock hit right after those earnings. So what happened, and what does it need to do to actually get that re-rating that a lot of people thought it deserved at the end of last quarter?
Q1 was a really difficult quarter for Google, and they snapped back in Q2, and ad spend came back. They also implemented the largest buyback in the company's history. So we continue to remain fans of Google. Despite the concern of Amazon stealing ad share, we believe that there are many engines that are firing behind the scenes at Google that are going to be bigger businesses for the next couple of years. We also believe the valuation is really favorable, 10 times EBITDA. And we believe EBITDA growth will be closer to mid-teens. And now they have the biggest buyback that they've ever had. And so we think they're becoming somewhat more shareholder friendly. They have been viewed inside tech as one of the least shareholder friendly companies in terms of the interaction with our clients, the buy side. And we think that these steps towards the buyback are one great step in the right direction. They still have a long way to go. So the sentiment's, pretty poor.
You mentioned regulatory overhang with three stocks, Facebook, Amazon, and Google. I believe it was those three. And those certainly are the ones that appear to have the most, quote, regulatory overhang code for being broken up. If you had to pick one that is most in danger of some kind of regulatory affront to its structure or its business, which one would it be?
We think they're all three equal, but if Google got broken up, we think the sum of the parts would equal a lot more than where the stock's trading right now. So if you took Verily, Waymo, a number of the initiatives internally, they would be valued way higher than Google's valued today. So if Google, we think all three are at risk. Google probably has the most to gain. If Amazon AWS was spun out and it got a software multiple that we see, that would definitely grow higher. I think Facebook, to us, doesn't seem likely to be broken up. There's really not much to break up. With Instagram, I think they've said that they have more security individuals working across both platforms than they have employees at Instagram. So that's not a really good move for consumers and their safety. So, again, I would put Google and Amazon ahead of Facebook.